Hello, today we're going to talk about dividends. We are still in chapter 15, Intermediate Accounting by Kiso. Now, dividends, it means أرباح الأسهم. Okay, so payments made by a corporation to its shareholders as a way to distribute a portion of its profit. They are typically paid in cash but can also be issued as additional shares of stock or other assets. Let's see. Okay, so we're going to talk about 4 types of dividends: cash dividends, property dividends, liquidating dividends, share dividends. All dividends except for share dividends reduce the total equity in the corporation. Okay, because we're going to take them from retained earnings. They decrease retained earnings. Okay. Now, cash dividends, it's the most common type of dividends where shareholders receive a monetary payment from the company's earnings. So it's paid in cash directly to shareholders, reduces the retained earnings and cash balance, suitable for companies with stable profits and cash flows. Now, the second type is property dividends. Dividends paid in the form of non-cash assets such as real estate, inventory, or other assets owned by the company. So it's used less frequently than cash dividends. The assets distributed are marked to their market value, fair market value, سعرهم بالسوق, and it can signal the company is conserving cash or has surplus non-essential assets. So if the company distributes surplus equipment or investment securities as dividends. Okay. The third type is liquidating dividends. These are returns of a company's capital to shareholders, typically during a partial or complete liquidation of the company. Okay. So يعني انحلت الشركة. Okay, so أنا بدي أدفع dividends. Paid when a company returns contributed capital instead of profits. Reduces paid in capital, not returned earnings. شو يعني liquidating dividends؟ يعني now I'm not taking from the returned earnings, I'm taking from the share premium. Okay, so he's saying paid in capital. Paid in capital يعني I'm taking from the share premium. Okay. Usually occurs when a company is shutting down or restructuring. Okay, so here a company liquidates part of its assets and distributes the proceeds to shareholders. Okay, last type, which is share dividends. In this case, dividends paid in the form of additional shares rather than cash or property. يعني بدل ما أعطيهم cash أو another asset بعطيهم أسهم. Okay. So it increases the number of shares held by each shareholder but does not affect total equity. It's used to conserve cash while rewarding shareholders. يعني أنا بدي أخلي الكاش عندي بس بدي أعطي dividends للshareholders, so بعطيهم زيادة أسهم. Okay. So عنا 2 classifications: small stock dividend, which is less than 20 to 25% of outstanding shares; large stock dividend when it's more than 20 or 25% of the outstanding shares. Okay, so now as he's saying here, all dividends except for share dividends reduce the total equity in the corporation. Okay, so cash dividend, property dividend, liquidating dividend, we are taking from the returned earnings or from the share premium, so it's decreasing. While share dividends, I'm taking from the returned earnings and I'm giving shares, so it's still the same, nothing has changed. Okay, returned earning will decrease, share capital will increase equity, so there is no effect on equity. Okay, so this is the first type, which is cash dividends. We said cash dividends يعني I'm gonna pay cash to the shareholders, okay, as a monetary payment from the company's earnings, and this is the most common type of dividends. Okay, now we have 3 dates: date of declaration, date of record, date of payment. Now, what's the difference between the three dates? Declaration date, it's the date that the board announces the dividend. يعني بيعلن board of directors إنه we're gonna declare cash dividends this year, this amount. Okay. Now, date of record, the company determines which shareholders are eligible to receive the dividend. So هون بحدد مين الشيرهولدرز اللي أنا رح أدفع لهم cash dividend، رح أوزع لهم dividend. Okay. Date of payment يعني I'm gonna pay the dividend on this date. So board of directors vote on the declaration of cash dividends. A declared cash dividend is a liability. يعني once إنه أنا أعلن إنه أنا رح أعطي cash dividends, it's a liability on me. I have to pay it. Companies do not declare or pay cash dividends on treasury shares. Yes, we do not pay cash dividends on treasury shares. We pay only on ordinary and preference. Okay, and this is an example on cash dividends. Roadway Freight Corporation on June 10 declared a cash dividend of 50 cents a share on 1.8 million shares payable on July 16 to all shareholders of record on June 24. So now, on June 10, it's the date of declaration. أعلنت إني أنا رح أعطي cash dividend 50 cents يعني $0.50 per share, okay, on 1.8 million shares. So it's going to be 900,000. So 50 cents, which is $0.50, multiplied by 1.8 million shares. So it's going to be 900,000. Now, again, dividends will be taken from retained earnings. So retained earnings will go down on the debit side, okay? Once I declare, so it's a liability on me. It's going to be dividend payable. My liabilities will go up, okay? So this is at date of declaration, يوم الإعلان. So بننقص retained earning وبزيد liabilities لأني أنا أعلنت إني رح أعطي أرباح على الأسهم. Now, date of record on June 24, there will be nothing, no entry to record. ليش؟ لأنه on this day, the company determines which shareholders are eligible to receive the dividend. So أنا ما في entry. أنا بس عم شوف مين الشيرهولدرز اللي أنا رح أدفع لهم dividends. Now, date of payment, يوم الدفع, I'm gonna decrease the dividends payable and I'm gonna decrease the cash. So dividends payable liability will go to the debit side, cash will go to the credit side, and the amount is here 900,000. Okay, now the second type of dividends, which is property dividends, and dividends paid in the form of non-cash assets. Asset بس مش cash. Okay, building, land, inventory, other asset owned by the company. حتى لو كانوا securities اللي هو equity investment أو debt investment. Okay, now we have two things here. Dividends payable in assets other than cash. يعني أنا عم بعطي asset بس مش cash. I have to restate at fair value the property it will distribute, recognizing any gain or loss. شو يعني؟ يعني لازم الاسset اللي أنا رح أعطيها كdividend, okay, it should be marked to their fair market value أول. يعني لازم قارنها مع fair market value to recognize any gain or loss. بعدين we distribute it. Okay, so we have this example on property dividends. Sun Limited Liability Company transferred to shareholders some of its investments and securities with a carrying value of 1,250,000 by declaring a property dividend on December 28, 2021 to be distributed on January 30, 2022 to shareholders of record on January 15. Okay, so as you can see, we have three dates: declaration date, date of record, and there is no entry on the date of record, then distribution date. It's not a payment here because I'm not paying cash, I'm distributing another asset. Okay, now at the date of declaration, the securities have a fair value of 2 million. Sun makes the following entries. Again, when it's property dividends, أنا عم بعطي أرباح على الأسهم, another asset, other asset than cash. I need to compare between the carrying value and the market value, because I need to adjust this amount first. So the value in my records or in my books, it's at 1,250,000. This is equity investment, because he said investment in securities not in bonds. يعني أنا مساهمة بشركة تانية، أنا عندي أسهم من شركة تانية. Okay, so it's equity investment. Investment in securities, it's equity investment. And again, this is an asset. Okay, equity investment, it's an asset. Okay, so the carrying amount قيمتها عندي in my books, it's 1,250,000. I need to adjust this value to the fair market value. So أنا كانت عندي 1,250,000 بالسوق 2 million. So I need to increase it. I need to increase this asset. Assets increase on the debit side. So on the debit side, at the date of declaration, okay, equity investment will go to the debit side because I want to increase this asset. And the credit side, it's unrealized holding gain or loss income. Okay, unrealized gain or loss. It's not gain, it's not loss, it's unrealized. ليش؟ لأنه I did not sell. If you sell these securities or this equity investment, so you're gonna have a gain or a loss. But here you are just comparing, you are just adjusting the value. So you want to increase it. So it's unrealized holding gain or loss. Okay, so when it's gain, you're gonna credit it. If it's loss, you're gonna debit this account. But here, I want to increase the value for my asset to be 2 million. So I want to increase it by 750, which is the difference between 1,250 and 2 million. Okay, it's 750. So equity investment to unrealized holding gain or loss. Now, this is the first one. In this entry, I'm just adjusting the value for the asset اللي هو equity investment. Now I want to declare that I'm gonna give dividends to shareholders. So again, dividends will be taken from retained earnings. They decrease retained earnings. And again, in the credit side, it's property dividends payable. I'm increasing liabilities. Once we declare dividends, I have to increase my liabilities. Okay, and the amount will be the 2 million, the new value. Okay, because it was 1,250,000, we increased it to 2 million. So this is the amount to be distributed. Okay, so at date of record, there will be no entry, because at the date of record, we said we're gonna see which shareholders will be eligible to receive dividends. Now at date of distribution, I'm gonna give them the equity investment. So I need to decrease the liability, which is called property dividends payable. It's not dividends payable, you need to specify that you're gonna give property. So property dividends payable, I'm decreasing the liability here, and I'm gonna give them equity investment. So equity investment, it's an asset, it's gonna decrease on the credit side, and the value is 2 million, which is the fair value. Now, this is the third type of dividends, called liquidating dividends. Any dividend not based on earnings reduces amounts paid in by shareholders. So I'm gonna decrease the share premium here. So مرة تانية, liquidating dividends, these are returns of a company's capital to shareholders, typically during a partial or complete liquidation of the company. يعني الشركة عم تنحل وأنا بدي أعطي dividends. Again, أنا ما عندي أرباح، أنا عم سكر الشركة. I'm gonna take them from the share premium. And this is an example on liquidating dividends. McChesney Mines Incorporation issued a dividend to its ordinary shareholders of 1,200,000. The cash dividend announcement noted that shareholders should consider 900,000 as income and the remainder a return of capital. يعني return of capital يعني share premium. يعني 900,000 will be taken as income, يعني I'm gonna take them from returned earnings. The remaining will be taken as a return of capital, يعني share premium. Now, McChesney Mines records the dividend as follows. At date of declaration, So we take dividends usually from returned earnings, but here he's liquidating. So we said I'm gonna take from the share premium, and he specified the amount to be taken from the returned earnings and the amount to be taken from the share premium. Okay, so these are the accounts affected here. Returned earnings will decrease because I'm decreasing this account by 900,000. The remaining will be taken as a return of capital, yani share premium ordinary will decrease on the debit side by the remaining, and the total is 1,200,000. So the remaining will be the 300. Now what shall I credit? It's dividends payable. Dividends payable because it's going to be cash at the end. Okay? Okay, now at date of record there will be no entry, but at date of payment I'm gonna pay cash to the shareholders. So dividend payable will go down. It's a liability. It will decrease on the debit side, and the credit side I'm gonna give cash of 1,200,000. And now the last type of dividends, which is share dividends, issuance by a corporation of its own shares to shareholders on a pro rata basis without receiving any consideration. What does that mean? Okay. It means that the additional shares are distributed in proportion to the shareholders' existing holdings. What does that mean? Yani, for example, if it's 10% stock dividend, يعني a shareholder owning 100 shares will receive 10% of his shares, يعني 10% of the 100, 10 additional shares. So he's gonna receive 10 more shares. Is it clear? Okay, this is the pro rata basis. Okay, maintaining their proportionate ownership in the company. Okay, now without receiving any consideration, it means the company gives additional shares to its existing shareholders for free without requiring them to pay any money. So no consideration here. Okay, unlike cash dividends, shareholders don't receive money. Instead, they receive what? Shares. Now, par value, not the fair value, is used to record the share dividends. So we take the par value. Share dividend does not affect any asset or liability. Okay, and there will be also no effect on equity, because as we said before, we're gonna take from the returned earning, but we're gonna increase equity. We're gonna increase share capital ordinary. So there will be no effect on equity. Journal entry reflects a reclassification of equity. It's reclassification, yani I'm gonna take from the retained earnings, I'm gonna put it share capital ordinary, so the equity total will be the same. Ordinary share dividend distributable reported in the equity section as an addition to share capital ordinary. It's not a liability, and it's equity. And this is an example on share dividends. Vine Public Limited Company has outstanding 100,000 shares of 1 par value ordinary shares and retained earnings of 50,000. If Vine declares a 10% share dividend, it issues 10,000 additional shares to current shareholders. So again, he said he's gonna declare 10% share dividend. So we have the outstanding here 100,000. 10% of the 100,000 will be 10,000. So these are the additional shares. Okay, so the outstanding now will be 110,000. If the fair value of the shares at the time of share dividend is 8 per share, we don't care about the fair value. We care about what? The par value. We care about the par value. We don't care about the fair value. We look only at the fair value when we have property dividends. We need to reach to the fair value. We need to adjust the asset to reach to the fair value at the date of declaration. But in share dividends, it's going to be totally ignored. I care only about the par value. So now, at the date of declaration, I'm going to take from the returned earnings. Okay, I'm going to take from the returned earnings, and I'm going to give shares later on. So we call it ordinary share dividend distributable. It's not a liability here. It's not a liability, it's equity. Ordinary share dividend distributable. We have 10,000 shares times the par value, which is 1. So 10,000 times 1, it's going to be 10,000. Okay, so now at a date of record, there will be no entry. At date of distribution, I'm going to decrease ordinary share dividend distributable. I'm going to give them shares. So share capital ordinary will go up by 10,000. Okay, so when it's share dividends, we are only reclassifying the equity. There will be no effect on equity. Retained earnings will go down, share capital ordinary will go up. So there is no effect. And now we're gonna differentiate between share split and share dividends. Share split increases the number of shares outstanding and decreases the par or stated value per share. So for example, if I have one share, the par value, let's say it's $5. Okay, when I say 2-for-1 split, it means each share will become 2. So I'm gonna have, instead of one share, I'm gonna have 2 shares, but the par value for each one, instead of 5, it's gonna become 2.5. Okay, so I'm gonna multiply the number of shares by 2 and divide the par value by 2. Okay, while a share dividend, it increases the number of shares outstanding, but it does not decrease the par value. The par value will be the same. It increases the total par value of outstanding shares, because I'm gonna have more outstanding shares with the same par value. Why do we do share split? To make shares more affordable, because I have a cash problem, I have a liquidity problem, I need cash. Okay, so it's gonna be more affordable for people to buy shares with lower par value. Okay, now why do we do share dividends? To reward shareholders and conserve cash. I don't want to give them cash, I need my cash, so I give them shares instead. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.